So this is my Discord, and yesterday I come to the Discord and I see here Fred is asking me, what do you make of SNDX? Is it worth investing? And you can see here JSO puts a link and tells a little bit about it. I come across these two, and I write back to JSO. I'll put Samantha on it and get back to you shortly. And so then JSO writes back, Samantha can do that. She's amazing. And that was at 3:07. At 3:26, you can see I wrote right back to JSO. Here's the link for the preliminary evaluation. And what that is I asked Samantha, based on these two guys or gals' inquiries, to do a simple run on it and see if it's something worth evaluating. I'll have her run a full financial health on it, and price projections this evening. And I sent a copy of it both back to Fred and to JSO. And what you're going to find is Samantha came back and told me this is a stock we need to do a full financial analysis on, and I'll share with you here in a second exactly what that came out to be.
Okay, this is the full financial report that Samantha did for me on SNDX, and as you can see, she breaks it down. She said they're a new oncology entrant with upside. She goes into great detail, or not great detail, but some detail of what they do. Goes through their financial health, their profitability. They are not profitable, so she gives them a D. Liquidity, very strong. They have a lot of money, $692 million in cash, and they're very solvent. They have moderately solvent with a little bit of debt. It says their total liabilities are $437 million with equity of $288 million. They get a C grade for their efficiency of using their assets to turn into profits. They're really not what we would call following the rule of 40. They don't have the growth because they don't have profits at this point. Then she goes into the market opportunity and explains exactly what their targets are. I'm not going to go through this in detail. You'll have access to this when you come to my website, Best of Us Investors. Then it goes through what their peer competition is. Why I'm doing this at this point is to show you the in-depth analysis that you can get through AI if you have access to the data sources that I subscribe to. And so it goes through all of that. And then the product, service, and innovation. This is very different. This is a pharmaceutical company. The innovation is a little bit over my head, but it goes into it, explains it, and you can come to some level of understanding. Then what everybody is interested in, and what I'm interested in, is what is the price of this stock going to be? It's $9.99 today. And so she gives me a conservative, a moderate, and an aggressive scenario. And so under the, and I pretty much focus on the moderate, because what I've learned is that what this is saying is if everything that they are suggesting that's going to happen to their company happens, this is what will result. The aggressive is if things get really, really good. Powell lowers interest rates. Some of the restrictions on pharmaceutical approvals gets a little bit more lenient. The government gets a little easier on them. That's what the aggressive is. So I focus on that of the moderate. And as you can see, as I said, it's selling today at $9.99. She's projecting even in 2025, or the end of 25, at the start of 26, that price is going to more than double, from $9.99 to $25. She's then saying in 2027, again, if they get the approvals, it's going to be between $35 and $40. And then January 28, it's going to be the $50. Well, that's easy math. $9.99 into 50, that's a five-bagger. Okay, so then I won't go through the aggressive. As I said, this is available for you on my website. She goes into the technical analysis, which gives us some indication as to where the buy-in price is. I think $9.99 is pretty damn good myself. Then she goes into the risk factors and what exactly could create some headwinds. And then she gives it a score. This is the next thing that I think is very important. And what the score represents is based on all the data that we just went through and the probability that they will achieve the moderate scenario in which it reaches $50 by the start of January 2028. What kind of score does she give it? She gives it a 65. Growth potential, she gives an 80. A risk level, there's risk. The FDA can turn down their clinical studies. Financial health, she gives it a 70. Management and execution, she gives a 60. Management has done well to date, significantly, but commercial execution is unproven. Our score here is neutral positive, assuming they will reasonably deliver launches, but according to some execution risk in scaling up. And then moat and innovation, a score of 65. Syndax therapies are innovative with first mover advantage in niches, which is great, but long-term moat will be dependent on staying ahead of the competition and expanding IP, intellectual property. For now, the innovation is strong, but a single competing drug could change that outlook. So she's conservatively optimistic. She calls it a moderate buy. And what that basically means is this could be a five-bagger. Or under the aggressive, it could be even bigger than that. But don't go crazy with it. This is not something that the widows and orphans should be buying. This should be a small part of your portfolio. Think about it as it's an Amazon back in 2009, and it has a bright future if the world adapts the internet as a source to buy anything and everything. That's what you're looking at here. So that's what I wanted to share with you. And then I want to share with you how I use this or share this with my tribe members. Okay, this is my tell sheet. These are the stocks I own and my analysis of them and my sharing of my analysis with them. I don't own this stock as of yet. You'll see it's down here. SNDX, currently selling at $9.99. Biotech, its market cap is $860 million. It doesn't have a PE ratio because it's not making money. Thus, it doesn't have a PEG ratio. But if we look at what its growth of its revenues have been, it's brand new, but in the projected growth of its revenues over the next 3 years will average almost 200%. That's not total, that's average. They're growing, they're projecting they're growing their revenues tremendously. So if I divide 6 years into the 200, I come up with 99. Then this is their projected growth in earnings, an average of 45% per year. If we add these two numbers together and divide, we're showing basically they're a very strong company. Then I want you to focus on this number, 357. That's how much they've increased their workforce over the last 2 years. They have tripled, more than tripled the size of their company because they're anticipating some tremendous growth. How far are they off their 52-week high? This is a depressed stock. They're 60% off their high. Then here we have the growth that we took out of the report that they're projecting that this $10 stock will more than double yet this year, then go to $37.50 at the end of 2026 and $50 at the end of 2027. So it's a 400% increase from the price, the actual from $9.99 to $50. That's a five-bagger to me. So that's where it is. Now, the analysis that I showed you, if you click on there, you'll see that gives you a link. You click on there, and that will give you the written copy of the analysis. Now, what I'm going to do yet this afternoon is to turn this over to Bart and Samantha, and they will do a podcast, and they will explain in a back and forth banter what this financial health document says. So you can listen to it as well. And then this will be a condensed version of this health document, about a 3-page document. So it's a reference point that I come to on a regular basis. 3 weeks from now, I might not remember what SNDX is. I can go to the briefing and it'll give me a briefing on it. As you can see, I do that on, these are the stocks that are on my watch list. I have not yet bought them. I do it for every one of the stocks that I own, and I color code them. This one, Google just had its earnings call, so I just added it. This is another one that Samantha just added to my portfolio, and I bought some of it. So that's been up just this week. And these are 2 others that have gone up just in the past week. And this is the analysis of Tesla. And as you can see, in all of these, we have, again, the financial health, the deep dive, which is the podcast, and the briefing. So this turns into a document that you can come to on our website and know what you own. I mean, if that's the only thing you achieve as a result of artificial intelligence and what we're doing at Best of Investors, know what you own, and then know what this is based on today's price. And today's price changes as the market moves. This is what Samantha projects you will make on QXO over the next 2.5 years if you buy it at today's price. Okay? At the same time, she is projecting if you buy Apple at today's price of $213.76, you will make 35%. So can you see how this gives you some inclination? Do I want to buy Apple and have a 95% certainty that I'll achieve the $290? Or would I rather buy ACLS and take on the 55% risk? Or would I rather buy ALOV and make 225 with a 78% probability? So I hope you can see this can give you some insight that has only been available to Wall Street up until now. But I figured out how I can implement, how I can buy the data and then do what Wall Street does at a fraction of the price, because we're crowdfunding this. I'm asking you for $1 a day to have access to this information. I'm asking you to have for $1 a day to share in SP and Fred's insights that they gave to me yesterday on Discord, that I gave to Samantha and Bart, and they came back, and now I'm sharing with you a 414% opportunity. Okay, go to the link is in the description. Come study this for 14 days for free and see if this isn't the direction you want to go going forward.